what's good, everybody? Happy Wednesday. Hope you're having a good day. Welcome to the Closing Beat. This is our show that we do daily to cover the stock markets. We're financial advisors here at Jazz Wealth, SEC fiduciary registered financial advisors. And we're coming after the big guys this year. American Funds, Millennium Trust, Fidelity, Schwab. If you have accounts there and those people are just not paying attention to you, come check us out here at Jazz Wealth. We're kind of like when you date somebody younger. They try so hard, don't they? They just want to do so well for you. So we're like the person that you're dating that's a little younger. We do educational classes. By the way, our customers tomorrow, look out for your email, Wine and Wealth. We're going to cover our portfolios. It's kind of like you get to sit next to a fund manager when you see the changes they're making in the funds. So we'll be covering all of that as we go tomorrow. But today we're going to talk about the stock markets. This is what we do here. We kind of just cover the good, the bad, and the ugly for the day. So let's just dive right into it. I'm ready if you're ready. On the screen on the right-hand side, you can actually see the Dow was higher by 90 points today. The S&P added 10. Another 60 points there in the Nasdaq 100. Little different story today, though, if you've been following us for the last couple of days or you've been following the markets. If you look at the bottom, there's a chart down there that you can see. You can see moments in time where the markets took little hits. So as we went through the morning, a little bit of a hit. Later in the day, about 2 o'clock, a little bit of a hit. Then right before the end of the day, a little bit of a hit. The markets are historically higher the day after a presidential address. I tweeted that out yesterday, and we mentioned it yesterday here as well. But the market got hit today at random points, which really sort of signifies what I've been talking about, that it's totally cool if the markets sell off a little bit, take a little bit of a break after running up so strongly. So this morning, the oil inventory numbers came out, and as you can see on that chart over there, the markets took a little bit of a hit on that news. We'll cover that in a second. Fed minutes came out around 2 o'clock today, I believe right at 2 o'clock, and the markets took a little bit of a hit. Then there was the whole meeting at the White House to work out this government shutdown thing. Apparently, President Trump walked in and said, "You guys going to do this thing or what? Are we getting a wall?" The other side said no. He just walked out and tweeted about it. Can't figure it out. Like, there's a whole tweet thing. You have to check it out, which is totally expected from him, I think. On the wall thing, just to get this out of the way, not really fair if both sides want the wall and they can't work it out. Like, the other side wanted the wall. Now Trump wants the wall. They don't want it. If he drops the wall, the other side is just going to fight for the wall. What's the deal with this? Like, we should be talking about like how much it's all going to cost, or negotiating so that both sides win. You know the crap they normally do. Anyways, at a stalemate, the government still remains shut down there. But you can tell by the stock market's movements today, we're running out of a little bit of steam here. It's due for a pullback. I'll point out a few things here as we go. If I press the right buttons. There we go. So if we look over at the markets, hey, it's a white chart today. We're trying to, freshen it up a little bit. Everything doesn't have to be so dark all the time. You're looking at the Dow on your screen there, and I've been pointing out how the markets have run up and ready to take a break. If I point these levels out, I tried to actually draw a line here for you so you can see sort of the area, both technically, but as well as those that like to follow Fibonacci pullbacks, things like that. We're just kind of getting to an area where all sorts of technical traders, whatever their strategies are, they all kind of converge in one place. And if you've ever heard me teach a technical analysis class, it's not necessarily the strategy, it's how they all converge. So on the Dow, we've got that happening there for sure. The Nasdaq back to the 50-day moving average, that's the blue line that you see on the charts there. And then the S&P 500 also hitting a resistance area. Today, you kind of see it pull back a little bit off of that. If you are one of our customers, we have 3 candlesticks classes for you. We're building a library right now, actually. I'm really excited. You have no idea, like, the cool stuff we're building. Also, Studio 2J, that'll be up here soon as well. Closing Beat will be coming to you from a new studio. Anyways, you can kind of see today's performance. If you understand candlesticks, take a look at what happened today. We got off to a great start, and there were moments in time where people started saying, okay, enough's enough. They took a little bit of profit there to the downside, or as we hit that resistance area. Now, if I could point out a few things here, we talked yesterday about how many names were higher by 8% in the S&P 500 or more, and how many were higher by 5% or more. Today, that number increases. There's a couple interesting stats that are really sort of sticking out to me here. You now have 77 names in the S&P 500 higher by 8% or more in just the last week. 6 days now. So if you go back 6 days, 8% or more moves out of 77 names, that's impressive. Gives you an idea of how sharply the markets have recovered here. There's now 173 names in the S&P 500 which is really 505 stocks, but we just say 500, that have gained 5% or more. So have we gone too far too fast? I will make that same comment that I have been since yesterday. It's totally cool if the markets pull back. Most stocks have had a really nice run and due for a pullback. Another interesting fact, I tweeted it out just a few minutes ago, not one stock in the S&P 500 has hit a new 52-week high in the last 14 days. If you happen to have a little clock ticking over here like we do, you know that that's the second longest streak going back to 1990. That's as far as I could go back on that one. Going back to 1990, that's the second longest streak where not one stock has hit a new 52-week high. Tomorrow, actually we got a little bit to go before we hit the longest streak, but that gives you an idea of how sharp this most recent sell-off was, where it pulled everything so far away from its highs that it's taken quite a bit of effort. So on one hand, it gave you the data to show you that the stocks that are pushing up really fast, however, they're pushing up really fast, but they're not getting back to where they were before, which tells you that was a very aggressive sell-off. One other thing, this is according to CNBC, for those of you long-term investors, as we all are probably here. In the last 44 times, when the market was positive for the first 5 days, this is not my data, by the way, when the market was higher for the first 5 days of the year, the S&P 500 finished higher for the year 36 out of those 44 times. That's quite a bit. I don't know what the percentage is there. Can't do the math in my head. Average gain, 13%. So it lets you know that, they always say, as January goes, so goes the rest of the year. It's not always true, but at least in this instance, as the first 5 days go of the new year, just thought that was kind of an interesting thing there. Okay, tomorrow we got a handful of reports that are going to come out despite the market government shutdown. We got the Fed speaking later in the day. You got Delta Airlines reporting earnings before the open. We'll cover that. Let's go over to the charts here and talk about the individual sectors. And I feel like I talked a lot today. Let's just dive right in. You got oil higher again. Would this be sort of like a very, very ultra short-term blow-off top to oil? They had obviously good numbers come out today. 5.2% gain on the price of oil today. You got the Saudi cuts in production, Saudi cuts in the exports to the U.S. U.S. inventories were lower than expected. We really weren't expecting much change. Basically, the way you look at that is there's a number that comes out once a week, and they talk about the U.S. inventories out of Oklahoma. And so we were not expecting there to be much of a draw on those inventory numbers, but there was actually a draw of, I believe, 1.7 million barrels, if I remember the number right. Don't hold me to that one, I'm not too sure. Yeah, 1.7 million barrels. And so that further fuels the bullish case for the price of oil. You can see by the charts there, it's pretty much up every day, all of last week, all of this week so far. So I would keep the same comments there. This would maybe not, I'm not allowed to tell you, but this would really probably not be the best time to go diving into a short-term trade if it fits your criteria and all the stuff I'm legally obligated to say. Home builders higher today. I tweeted out Lennar. Lennar broke to 90-day highs. Let's just show it real quick. There's Lennar. Drew the line for you on the screen. Earnings were a bit of a disappointment. They actually didn't guide forward. They said we're not even going to make a guidance announcement for 2019. But on a conference call, the CEO is actually a pretty cool guy. The CEO actually said they're seeing an uptick in traffic. So that had investors thinking, okay, maybe the worst is behind us. The traffic will reflect on your future earnings. He didn't actually say that, but he did say those positive comments. That pushes home builders higher. So home builders are higher by over 15%, over 16% here in just the last 2.5 weeks. Gives you an idea of how that sector's going. All right, let's dig into some stocks here. I don't really have anything else sector-wise, pretty much all good stuff, all the oil-related stuff near the top of your performance list for the day. Constellation Brands broke to new 52-week lows. These are your beer, wine, and spirits makers here. Remember, they just made a big investment in Canopy Growth. Canopy Growth is the cannabis company. So Constellation Brands borrowed $4 billion to be a part of that deal. They said that the interest costs on that loan will make them lower their growth guidance from 10% down to 7%. And because of that, investors are like, okay, this may be a good deal later, but that's an awfully large bet to make, and that's an awfully large amount of leverage to use to make that bet. So they held off a little bit on that. Interestingly, if I could point it out, Canopy Growth and Tilray. So symbol CGC, that was up 13% today. Tilray is the other cannabis company, was down a little bit today. They got coverage by Piper Jaffray. It just means that an analyst is now going to cover these stocks. It basically had good things to say. Put a $90 price target on Tilray, and then Canopy Growth also gave it the overweight rating. Essentially means he's bullish. And I wrote down a comment somewhere. He said, the timing of regulatory change is hard to predict, but we expect continued global momentum for the medical and recreational marijuana legalization. And because of that, they were pretty positive on the stock. So how do you like that? Kind of blended some other news with some other news, and we were able to knock out a few things in one thing there. Apple actually finished the day positive. Earlier in the day, the Nikkei reported that they had cut production again on their iPhones. This is a bottoming type formation here. So you got Tim Cook in the news, you got the Nikkei overnight. You still have a stock that's oversold and in the bottoming phase, kind of like the market. You don't expect it to just blast off to highs again, but there's a process of rebuilding at lows. There'll be some choppy moves here down at the bottom, back and forth. I think we're going to see a lot of this overall. So I'm like happy with what Tim Cook said. I see the comment there asking about that. I think that's cool. There's gonna be this competition, by the way, overall between Amazon, JP Morgan, Berkshire Hathaway, Apple just has to jump on the bandwagon. I think that'd be great if they all work together. You talk about a powerhouse there. But Apple can handle most of this on their own, I think. They're going to have some lessons to be learned. But you have healthcare finally being, attempting to be solved here in the States. It's going to be a long road, really long road. But see what's happening? You have companies going, hey, there's opportunity here. We have to make the cost better for the consumer, but there's opportunity for a profit, and yet everybody wins. Let companies do what they need to do, right? That's, I don't know, whatever side you stand on politically, there's so many examples in the past of where companies are able to make a profit. Consumers like the deal, and if they don't like the deal, they don't use the company. Foot Locker higher today, almost back to 52-week highs, wasn't able to get there. I thought this was going to be the one today. If I look at Foot Locker and zoom out, you had a very strong start, and you only had a little bit more to go to get to these 52-week highs. So I thought that was going to be your deal breaker today for that stat that I gave you earlier. Couldn't get it done. It didn't matter. Baird upgraded the stock. They said the company should be able to continue to perform. Foot Locker's killer, man. I mean, we've talked about it a few times here. It's one of those faster movers, really starting to pick up. Lennar, we already mentioned. GoGo, you know who GoGo is? This company is not very good at getting positive headlines, so I give them a little credit for today. GoGo, the stock was a little bit higher today, 15%, which is pretty good for GoGo. It's a faster mover there. So they put the things on top of airplanes that allow you to have internet, and they charge you like $15 to have internet for an hour and a half. But the little gadget that's on top, the satellite, so there has been an issue where they de-ice planes, and when they de-ice the planes, whatever's going on up there on that thing on top of the plane, it's been contaminating the de-icing stuff. So GoGo basically came out today and said they actually didn't incur the costs that they thought they would that were associated to that. They had better than expected reporting from how they were going to solve that solution. I didn't read into it a lot, I'll be honest with you. The main point you want to know is this probably came up on your radar today as one of the better performing stocks. They lose $144 million a year and they make $900 million. So they go out on all these planes, we're all looking for internet, they make $900 million from our $14, $15 and all the passes we use so that we can check our email while we're on an airplane. Yet they lose $144 million, and there is pending competition from AT&T there. So don't get too excited about that one, although I didn't just tell you what to do. Snapchat lowered today 1%. Snapchat just, I don't know. I kind of feel bad for them, but the company just, who was it? Jeffries lowered their price target to $7 just to try to grab it more in line. They had a lower outlook on their overall revenues and then the number of users that use the product. I don't have anything else to say about that. What do you say about Snapchat? We should do just a video just on Snapchat. Did I do that already? I think I did that already. Anyways, I'll stop talking to myself. That's about all I have for you here today. We got one negative vote for the white chart. You don't like it? I was just testing it. Give me a break. We can switch it. Oh, you like the black? Okay, so nobody likes the white charts. All right, well, fine, then I quit. All right, that's all I have for you, really. Tomorrow, we already mentioned what we have coming up tomorrow. Delta Airlines, that'll be the earnings focus. Remember, they didn't have very good things to say about the December period as far as people spending more money on plane tickets. Just didn't happen for them, so we'll cover that. Remember, the markets are higher. If they pull back, not a big deal. If they pull back aggressively and we lose 1,000 points in the Dow like tomorrow, that's bad. But if we lose 100 points tomorrow in the Dow, we're down 13 or something the next day in the S&P or something, not a big deal. We are not out of the woods. We've got the government shutdown still. Trade discussions are over, but we don't know anything about them. All the negotiators are headed back to the U.S., I guess, to tell Trump what they came up with because they can't, email him. I don't know why. So trade discussions still going on. Brexit next week, earnings starting next week. JP Morgan starts on the day of the Brexit vote, so that'll be interesting. Lots to talk about next week, but if you have a trip planned like Disney World or something, go for it. If you took the rest of the week off, I wouldn't bug you. I like the white charts myself, so I'm gonna try to tweak them a little bit for you, but I like the white charts myself. Okay, that's all I have for you. Enjoy the rest of your day. Thanks for watching. If I helped you in some way, you know the drill. If you'll hit the subscribe button, that would really help us out. We don't make money off of this, but I want to show users, viewers, and the data behind it because I'm going to be speaking at some conferences later on this year for the financial advisory industry, and I'd like to help them a little bit. All right, talk to you guys later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.